The most important thing for Terra Luna Classic right now is community. That's you guys. Sharing my content, sharing all content you see is paramount to attracting new investors. Paramount to attracting new investors is price going up. That's the way that this happens. So if I do a good job, you do a good job, we do a good job, then guess what? Price goes way up. Let me show you what I'm talking about. Make sure you hit the like button on the way in. We're going to talk about price and what I expect to happen. So to summarize, I expect Luna Classic to have at least a 40x. I expect us to go to around 2027. Simple, easy, and financially, it's right in line with where you might expect. We're at 350 million market cap right now, but in the market, I suspect we're going to see something around 12 billion. Now, if that happens, then we're all going to make a pretty good amount, I think. So let me show you how we get there. First of all, the things that you need to know are why did I pick this box? Why was I right about this box right here on the top? Now, if you don't know what I'm talking about, this little box area right here, a couple days ago, I said, we come up here, we're going to visit this area. It's going to be very important because there's a 200 MA crossing over. So the 200 MA is really kind of an indicator in all trading on whether you are bullish or bearish. If it's above the 200 MA, that is a bullish indicator. And if it's below, that is a bearish indicator. And what that does is it's taking the average price close over the last 200 days and it's giving you an average. And that average is what you should be above. If you're above that, then all indicators, all MACD, RSI, all of these things, if the 200 MA is bullish, then generally the rest of the tools are going to be bullish. Now, you can do 201, you can do 202, you can do 196. The point is you're going to get right around that same area, and what you want to be is above that. When you're above that, great things happen. The yellow line is the 50-day MA, and that is a shorter term goal showing you trends that cause reversals. And when you get the 50 crossing over the 200 and going above it, that means that price has been going up. It's a lagging indicator. That means that what happens on the chart is how it reads and how it reacts. So it's a historical content. It's historical. And then it moves above, and that is a very bullish indicator. And let me show you a couple of times when we cross over right here. We have this huge move right here. We cross over, we have this huge move right here. We crossed over, we probably didn't cross over again down here. No, but the two times that we've had crossovers here, golden crosses, then we've had significant and major rallies. Some of them 4, 5, 6, 7x. So the question now would be, what would happen if that were to happen again? And that's going to happen again. So now we need to deal with this. New investors have not been stepping in with as much excitement as previous investors. So we have this little range right here, and this is the top of here for each one of those surges that we get. And what we need to figure out is, once we see this thing is going to happen, once we get to the point where it's going to happen, how high will it go? Well, the answer to that, again, totally 40x, but right now the focus should be on maybe about a 2 or 3x to get to this position right here. That's what we're looking to see happen. Now, in the event that that were to happen, it breaks above here and then tests back down here. That means that the resistance, and that is the people who are willing to sell on the chart on prices, which this right here is going to be a problem because there's a lot of trading in this sort of range right here, which is why this is a prohibitive problem. But if we get enough buying pressure that pushes us above that, then the people who are going to sell will already sell. So when the price comes back down, there won't be as many second chance sellers. And that means it'll be easier to continue surging back up to this next area of resistance, which is going to be this little spot right here. So ultimately, I think this is where we're going to end up in the short term. Now, you can see there's a lot of trade volume right here, a lot of trade volume right here. So we could get a surge up a little bit higher or even a little bit higher into that 303 sort of area. But I would say on a conservative basis, most likely this little green line right here becomes the next little area that we're going to visit. Now, how do we get from there all the way back up? Well, money flowing in is basically the answer. This is not about burns anymore. We'll talk about burns in a few moments because they do matter, but that's what I'm looking for right now. That's the sort of confirmation move that we need to see. And by the way, I know a lot of you are looking for a massive catalyst to make something like that happen, but when we get into the banana zone of altcoin season, none of that's going to matter. The part that's going to matter the most is simply the speculative asset that could go 40 or 50x and just go absolutely parabolic. What we need to see to attract people is going to be a big candle. Once you get a big candle in here, people are going to be like, oh my God, something's happening. And then you're going to get FOMO buys, and we're going to continue higher and higher and higher. So that's the goal right now, is to find the news, wrap it up the right way, and present it to you that something incredible is about to happen. Okay, so that's what we're looking for right now. Now, as far as volume goes, the volume, about $14 million a day on USTC, about $19 million a day. The reason I didn't talk about USTC is because there's not much to talk about. It's not pegged to anything. It's not doing anything. It's a speculative asset, 100% right now. I think Luna Classic is the better of the two options, in my opinion. Whatever you think is fine. Whatever you think is okay. But I think that the asset that matters the most is Terra Luna Classic. Now, if you haven't already, make sure you sign up for terracasino.io, where the pros trade, where the pros play. So if you're looking for gaming, if you're looking for sports wagering, whatever it is that you're looking for, Terra Casino has it for you, giving away, as we speak, 1.2 million euros. Make that dollars from July 15th to July 28th. So play 777 Rush Daily Drop. Also, if you want to trade any meme coins, Terraport.finance is your place to go. If you want to trade any utility coins, Terraport.finance is your place to go. And the parent token here is Terra, Terra. So buy yourself a bag, stake it. You can earn over here. All you have to do is attach your wallet and set it, and then you can start staking and earning some yield and reward. The last conversation we had was about synthetic tokens. I still don't see how this makes it makes no sense to me. Maybe I'm just too dumb to understand it. Certainly a possibility, but I don't see where does the liquidity come from in order to make this a thing. It just doesn't seem like this has been thought through. And it may be that they've thought it through and they think that the trading is going to be enough, but that's not really, I don't think, true. This would just lead to me, it sounds like chaos. I don't know about you. Burn to earn future redemption program. Again, same thing for me. They're telling you just, oh, if you just burn all your tokens, then you're going to be better. That doesn't make any sense. It is my belief that burns should be done post-transaction. And what I mean by that is once you have completed your transaction, you sell 1 million tokens. Then 1 million tokens leaves your wallet. But before that 1 million tokens goes back into the liquidity pool, 900,000 goes to the liquidity pool and 100,000 is kept over. A portion of that goes into the Oracle pool. A portion of that goes into some other pool, and then the other portion goes into using buyback and burns of corresponding assets. So, you know, for example, if we're putting 2% into the Oracle pool, 2% into the community pool, then we've got 6% of that transaction left, or 60,000 tokens. Now we could burn 30,000 of those tokens and then use those 30,000 tokens that are left over to burn USTC over on the other side, and thus reduce the supply on both of these projects at the same time. But you were made whole by virtue of that million. So that is, to me, the way I think that it should be. You guys let me know if poke holes in it, by the way, in the comment section down below. As far as the validators go, guys, you have to remember, I want to implore you to understand that these validators use your delegation and give it to the validators who support your belief system. If you think that you should be fully decentralized, that there should be nobody in charge, that, you know, if we just run a drift without an ore, that's okay with you because, you know, you're able to make money off of it or whatever the case may be, then you want to use a validator who does that, who's purely about no leadership, who's purely about, you know, full 100% total, no questions asked, decentralization. But if you want to be like the other top 200 cryptos that all have some form of leadership, or at least a steering committee to make sure that there is proper exposure. And by the way, when I say that, understand that Bitcoin, as an anomaly at the top of the list, also had people who were promoting Bitcoin during all of this time, with the approval of the community. We have not had the same. We've had our community working against us to provide leadership to push and propel us forward. I should say, like the other 198. Bitcoin would be something of an anomaly in that regard. But they vote every time there's some kind of proposal up for something that's going to happen next to a DAO system. And it's imperative that you delegate your crypto, if you're using it, to the validator who best suits your voting. And if they don't vote the way you want, validate with somebody else. Validate with somebody who believes more in a little bit more centralization so that we can propel ourselves forward. Now, what I do think should happen is I think we should have a steering committee that runs on a 90-day basis or maybe a 60-day basis or something, and we continuously vote for it. And we have a rotating committee of who should or shouldn't be on, and that we should have different little maybe departments and stuff like that, giving us an impetus to move forward. The control will always be the DAO system, but so they won't have the keys to the kingdom, if you will, but they will be able to guide us in the appropriate direction and give us ideas and things that motivate people to become investors, to allow for this thing to build. That is my opinion. You let me know what you think in the comments down below. Finally, a couple days from now, about 9 days from now, we're going to get the next big burn from Binance. Should be pretty significant, but I don't think it's going to be life-changing. Remember, we haven't had enough volume for that kind of pump. However, I am reading through, kind of interested here in what's going on with Leonardo and Ceramic as they go through this process of clay. And then they've got the collateralized market maker. And then there was the reason for that is this is a forecast compiled by Lunk, Buyback, and Burn. The burns are in dollars, not Lunk. The table is in the first white paper based on a universal repeg. The rationale is still valid, but what has changed is the potential size of the collateral market maker. So let's say 25% of USTC converts to USTR, then the number would be 25% of these values. So the 10-year projection would be around 1.5 billion instead of 6.3 billion. So that's 6.3 billion in how much you would burn over the course of the next 10 years at the current price. Now, that of course you have to account for the amount going up. You have to account for all of that. So there's some incentive here for this repeg to happen, I would say, based on what they're doing right here. Crazy amounts, by the way, over a long extended period of time. That does take that takes a lot. That takes a big step, by the way. That's a big step to see happen. So if this were to be true, then I know we're going to be solving a lot of problems for a lot of people. Now, this, by the way, is USTC. This is not Terra Luna Classic. That's just the amount that would be burned by Terra Luna Classic. And listen, at this point, I think we should really kind of rationalize. In year one, it's telling you that if in year one this happened, Lunk, Buyback, and Burns would be 75 million. Well, we have a liquidity pool right now of about I want to say somewhere in the neighborhood of 75 million. So I don't think this is right. I think that I understand how they're coming to this, but I think, more realistically, not even 25%. 5 or 10% of that value would seem a little more in line. So if you were to burn 10% of USTC in the course of a year, that would be a significant portion. If you were to burn 25% of USTC over the course of a year, then that would be significant, because you're talking about 5 billion in supply ish, and you're to reduce that by 1.25 billion. That would be an enormous accomplishment. I just don't think that that's how that's going to work. I just don't see that. And remember, we can't just repeg USTC to $1 because you have to have the money. You have to be able to cash that out. That's what a stable coin is. And you can't do that because the money does not exist. The liquidity pool for USTC is more in the lines of like 12 million or something like that, like 13, 14 million. Like, it's not even close. So just different levels, if you understand what I'm saying here. Just different levels in the amount. So maybe 1 penny we could do, and then when it gets to 5 cents, when we've got enough in the collateral pool, when we've got enough collateral to make it repeg to 5 cents, maybe we could do that or something like that. Like there would be a path forward like that. I don't think it would happen very rapidly, but my opinion. So anyway, let's close out with burns. The burns yesterday, insignificant, 27 million. It was better on a Sunday. We had 48 million burned on a Sunday. So not burning nearly enough, but we're still burning. We got 20 million burned. Had some significant burns for a few days in a row on USTC. Now, again, when we say that, understand that 6 billion, by the way, not 5 billion. I'm an idiot. But it's still coming down. You can see here that it was really, really bad for a long period of time. A lot more significant lately. That's because the volume is up. So, hopefully this leads to some kind of crazy something or other. Now, remember what I told you before. There's so many people that have pulled from validators in the last, 2 weeks or so, that there's going to be a lot of movement coming. So we're going to get a lot of burning, in my opinion, coming up very, very shortly. We're going to start seeing money moved over to Binance, most probably, because I think some people are expecting a breakout. And also, it should be noted that people are getting a little bit worn out from waiting for this type of pump, and they're seeing the rest of the market pump. So some of these people are getting that quote-unquote buyer's remorse. That is the truth of what's happening right now, and that should lead to a sell-off into a pump, or with an anticipation of a pump, so that they can take some profit and put it into something that they think is more lively. That is true, by the way. Now, is that correct? Well, it's complicated. Some of it could just be people moving it around. Some people are doing different things with their assets. But, generally speaking, it means that people want to be liquid so that they can start trading. So you're seeing this unbonding process for the next couple of, weeks. And then we'll start seeing what they do with that Terra Luna Classic. Maybe, again, they're thinking about a 3 or a 4x is going to be enough to put them in a nice little profit. Maybe they need to take a few bucks off the table. We'll see what happens. Anyway, that's my opinion on what's going on. It's not financial advice, but I'm always right.